All right, guten Morgen. It is it Wednesday? Yeah, it's Wednesday, December 3rd. No, Wednesday, December 23rd. What do you think? Rudolph the Red-Nosed Reindeer is drinking his bullet coffee, getting ready for the big dance coming up. Hope you were not on the naughty list. So hey, today we still got some trading. The markets are still open. Well, sure, the herd might be thin, but still, we're wolves. Ow! We must cull the herd. We're going to prey on the sick and weak today. That's what we do. It's only natural. So let's get on with it. All right, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk panic. Whoa, man, that is zoomed in, huh? Hey, well, anyways, here's my friend the bear. Oh, there's my friend the bear. There's my friend the bull. Sometimes he's right, sometimes he's right. Right? So anyways, so you got to pick your team. It's just funny. But look at that. I got to clean up your desk. This is how I feel. This is what I get when I got too much going on. My office gets all messy, so I need to spend a day here focusing on my temple. So anyways, good morning, everybody. My name is Wayne McDonald. I'm a currency trader. I love currency trading. I used to be a venture capitalist, and then I said, why am I pissing around with $100 million a year opportunity when I can do 2 or 3, 4, 5 trillion a day? Imagine that. The leap of faith to say, hey, I don't know anything about trading. I've never traded anything before. I don't know what the Forex is. I don't know economics. I'm a financier. I'm not an economist. I don't know anything about trading. I don't know anything about charts, but I'm smart enough to go where the money is. And $2 trillion a day sounds like a heck of a lot of money. I got to be smart enough to make something on this. And that's how I started my journey. I basically jumped out the window with no parachute and started running. So here I am, 20 years later? It's still awesome. Still awesome. I love trading. Just the idea of the combination of economics and trading, like fundamentals and technicals, the combination of that is just so fabulously interesting. This idea of what's your strategy, but then how do you carry out your strategy, right? So you're both the general, the platoon leader, I guess, and then even the grunt kicking down the door and putting ammo into targets. I mean, you're everything in this biz. So it's pretty cool. So I appreciate what we do. I appreciate you being on my team. I thank you for the loyalty and respect that you show me every day and the hard work that you put into this. I really do. I appreciate that. 2020 was a very interesting year, so I'm glad that we got through it together. And then 2021, I don't think it's going to be as easy as everyone thinks, or does anyone think it's going to be easy? I don't know. I think it's going to be interesting next year as well. So today, what are we going to do? Technical and fundamental analysis, put out some trade plans. Great. Excuse me. We also have Trump doing perfect game theory again, where we got this hastily thrown together stimulus package, and he's like, this sucks. And of course, it probably does suck because they threw it together at the last second. I mean, think of it. Politicians meeting halfway on everything produces nothing, right? Great. It's actually the right thing to do. So for them to come back on the 28th and 29th and do a real deal, I think he got schooled by the boss. So that's cool. Right on, Trump. I made too much money, so I'm not going to get anything, apparently. So maybe they'll change it and say you can give it to rich people too. Yeah. Well, Jim, think of it as 5,600 pages of mediocrity, really. When you meet halfway, like, nobody wins, but you did something? Like, that's BS. You know what I mean? So anyways, right on. So he's getting it done. Great. So we still have things to do. Not a lot has happened in the market. Why? Well, we knew that last week. Not many people are going to be here except for the interns. All right? The rich people with their beautiful friends are already on a beautiful Caribbean island somewhere going, what COVID? All right. So anyways, thank you for being part of the team. Thank you for being a subscriber. Please click the like button. Please leave comments on recordings. And please visit tradersway.com. They're part of our community as well. Please visit tradersway.com. In the bottom right-hand corner, there's a form to fill out to open up a demo account. Please do that. Just do that for whatever reason, just because I'm asking. Okay? Please go to tradersway.com, fill out the form, get into the back office, download MT4, download MT5, whatever you want. There's CTrader and a few other trading platforms. Pick one and do some demo trading and give them the opportunity to earn your loyalty and respect while you are learning with me. And if you like fast execution speed, big swaps, small spreads or fees, right? Then cool. But just the business mindset of the folks at Traders Way that say, you know what? We want to invest into your education up front so that you can learn how to succeed in this thing we call Forex. They're investing into you first and then hoping you pay it back through the laws of reciprocity. Huh? So you win first and then they're hoping, hey, will you trade with us? Can we be your broker? I think that's cool. So tradersway.com. Yeah, I don't know why these settings change. Sorry. Why would it just change like that? Thank you. Apologize. Yeah, all right. Great. Yeah, it's weird. I don't know. Just the settings just change. Why? I don't know. All right. So, I know you're rolling your eyes, but we have to revisit what we said, what we planned to know where we are so that you can connect the dots and learn. Because if you don't learn, then it never happened. If you don't remember, that's really the basis of learning. You understand, so you remember, right? So anyways, 12, 24, 36 weeks ago, we said last week we would exit trades, but last week we would have down on both the yen and the dollar. And that last week you should probably exit because we expect up. Well, even though we expected last week and the week before, 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 down, down, down on these two things. Yellow for weeks, if you will. But we expected this week to be up, the exact opposite direction. And, well, it's crazy coincidence if it, right? Or it is plannable because it's repeatable. then you say, well, it's not all voodoo magic, because we know if you look at these pairs, right, this downward movement pushes pairs up. So I guess we should draw it this way. The yen weakness had a floor. The dollar weakness had a floor, predefined by monthly pivots, of course, which is the basis of much of our forward-looking guidance, technically speaking. And then they flipped on the week we thought they would flip. Now, that's less of an amazing coincidence when you say, well, mathematically speaking, we look at things like 2 standard deviations from a weighted mean, and those calculations tell us this is a time to probably exit. This is a time to probably exit because it'll probably go up. So now it's not amazing coincidence. It's really, mathematically probable. And having that mindset back you up should give you the strength you need to get out of bed and do what needs to get done. Am I right? No longer trading on randomness. It's not a random walk down Wall Street. But we have technical and fundamental reasons to expect these changes before they happen. So now, as they happen, you behave appropriately. Am I right? Yeah? All right, looks like the delay today is even bigger than before. I changed the settings so that you can stream in 4K, but it's like YouTube just can't handle it. Now there's like a 30-second gap. Usually it's only a 10-second delay. Now there's a 30-second delay. But you can watch me delayed in 4K, but when I ask a question, I have to, sit on my thumb for 30 seconds, which is very uncomfortable, of course. That's true too, right? Are we going to read that book, by the way? Fooled by Randomness? We'll put it on the list. One of the things I did is I went to Amazon.com, and they have various lists of the top 100 books on investing, books on economics, and all that. So we're going to read the top 100 books of all time that are focused on trading, investing, economics, finance. Okay, cool. So maybe Fooled by Randomness would be that one. Yeah, cool. Okay. Yep. If we can get enough people involved, like I think if we have 50 people join the book club, then I think we can have as many as 5 teams of 10 people. Okay? And imagine 6 months from now, you have dissected and learned from the top 100 books of all time. We do it in 6 months. How many people would like the bragging rights to say that you read, right, over 100 books this year in 2021? That's some nice bragging, right? I haven't launched it. I have it. It works, but I want to tweak and add more stuff. So I need things like, the next thing I'm going to ask the programmer to do is build a process in which you will take guided notes. Because I need some consistency in how you guys read. And of course, we're all different individuals with different levels of, let's say educational experience. So someone might put in stupid answers or no answers. They don't know how to take notes. And someone else might be a PhD and wants to write a dissertation every time I say, so what did you think of the book? Oh, well, let me write 47-page document. I'm like, whoa, dude. It was, whoa. And the other one, I'm like, what do you think of this book? It was good. Why did you like it? I don't know. Right? So we need some consistency. So I thought there should be a methodology in which you read and you basically complete a form as you're reading the part of the book you're responsible for. And it might be you or, 2 or 3 other people reading the same stuff. So I thought, it'd be great to aggregate the information that you guys have. Then I thought it would be really cool if you guys had team meetings too. And I mean, we can get really collaborative. But remember, I'm trying to give you a Harvard MBA for just a few $100s a year. Okay. Michael, there's no way I'm going to recommend stealing people's intellectual property. Okay. Yeah. Cool. Hey, right on, crypto. Profits of rage, right? Right? Every time I see your name, I always think of this. All right. So, mediocrity looks like more profit-taking and stuff. So cool. So let's take a look around the world. That's right, Michael, but it's just I can't be that. I just can't legally recommend such sites, right? I'd get into trouble. But people can get their books wherever. Now, imagine if everyone bought their books through the book club and the book club could earn a few pennies from Amazon, then I could lower the subscription cost, right? So anyway, so we have to all agree on the laws of reciprocity again, right? If you don't know the laws of reciprocity, I don't know why this is coming up, but okay. Here's a park in the center of town. Beautiful green grass. And around this town, you have sheep herders. And they all agree that they all have sheep. And the sheep eat grass all day. Okay? But at the end of the day, when they put the sheep back into the pen, the farmers like to hang out in the park where there's beautiful green grass. But because the sheep eat the grass out here in the fields, there's no grass. Now, it's really easy for this guy to sneak in the middle of the night and have his sheep eat the grass in the park, because then he gets better quality sheep, happier sheep, or healthy sheep. And then so this dude says, well, if this guy's going to do it, I'm going to do it. And this guy says, well, then I have to do it. And now there's no grass anywhere because the sheep ate all the grass. Only because one idiot tried to screw everybody else. It only works because no one is taking their sheep to the park. So if we all work together, then everybody wins. Right on, Luis. So the whole idea with the book club is that most people don't read. I understand it. I don't like reading. The second thing is when you do read, you bang out the book, and at the end of it, you didn't put any critical thinking toward it. You just kind of read the book, and then someone says, what do you think of the book? Oh, it's good. Well, can you write can you take a 70-page, a 70-question exam? No, I don't, right? What are the 4 quadrants of the risk model? Oh, I don't remember what the 4 quadrants are. Did you read the book? Yeah, I read the book. What are the 4 quadrants? I don't really remember. That was early in the book. I don't remember the 4 quadrants, right? So like you read the book, and it doesn't mean you put critical thinking or you learn, but you read the book. So being educated simply means you read a bunch of books. Well, who gives a crap about all the books you read? So the next level of intellect, to be an intellectual about the subject matter, you have to put critical thinking into it. And discourse, right? Not discord, don't get all excited. Discourse, you have to talk with your friends. So we will use the Harvard case study methodology that they use at Harvard Medical School, Harvard Law School, Harvard Business School, etc., 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 to build intellectualism. Because imagine if you're in the Harvard MBA program, it's not like a professor comes in and tells you everything and you're like, you know what, I didn't even read the textbook, right? And you just show up for your lectures and bang out the 2 papers and take the exam at the end of the year, right? No. That's not how it works, because that means you're educated, but you don't know crap. And Harvard's about knowing a lot of crap. So they do the other way. You show up to class, everybody assumes you've done everything, and now we start. And if you haven't done the work, it's painfully obvious. And you can now go to Cambridge Community College instead of Harvard Business School. It's just a short bicycle ride away. And it's not $100,000 a year. It's $50 a year. All right, so you kicked out. So it's pretty easy. If you show up and do the work, everyone will know, and we can all learn together. Again, laws of reciprocity. If people show up and they haven't done the work and they haven't put in the critical thinking, then your involvement is pointless, right? So anyways, it's going to be pretty good. So now imagine as a team, again, laws of reciprocity. Let's go back. We have this organization, this institution, right? Us. And if everybody, right, reads the book, so let's say we have one book, and this is one team. Okay, you get this? And this person reads 1 and 2, 3 to 4, 4 to 5. 1 to 2, 3 to 4, 5 to 6, 7 to 8, 9 to 10, 11 to 12, 13 to 14, 15 to 16, 17 to 18. Okay? That's a standard sized book, don't you think? Okay, do you understand? If we all did this really deliberately, and you sat here and you read chapters 1 to 2 very slowly, took detailed notes in an organized fashion, right? Critically thought about the material. Meanwhile, someone else is doing all these other things. How long will it take you to read 40 pages? One day. So we could start on Monday, and on Tuesday, we're done the book. An 18-chapter, 327-page book. We start on Monday, and on Tuesday, we're done. And we can come together now and really critically talk about it as a group in the Harvard case study methodology. Do you understand that? We can read as a team now 350, 400, 500 pages a day as a team and come back and critically discuss it. So I'd like to have, so what is this, 1, 2, 3, 4, so I'd like to have twice as many people on a team so that we can have a discussion. So I can say, okay, Jim and Sally, right? Let's go through chapters 1 and 2. First of all, tell us about the author. Who is the author? What are they like? And why did they write this book? Okay? And meanwhile, Jim and Sally, I can ask questions and they can respond, and we'll have we'll discuss it. We'll have a critical understanding and we can go through it, right? And from that, create mini quizzes so that someone else that's reading could do the reading, take a mini exam to make sure that they're going through the subject matter properly, and then watch us discuss it in a Harvard case study methodology. Oh my God, rookie's like, it's a good trade. Of course it's a good idea. It's amazing, guys. We could literally read 100, maybe 150 books next year. Depends if you want to do it. Because as you're reading this book, we could have 5 teams like this reading other books. So let's say six months from now, right? You've only read maybe 10 of the 100 books that we read, but now you can go back and do everything else on your own, reading the other books, critically thinking about them, using our case study methodology, answering mini quizzes to keep you on the right reading path, thinking about the right critical issues. And then once that's passed, watch the group team meeting like Harvard Business School, having students discuss the material in a Socratic method dialogue with the professor as the guide, not the preacher. Holy cow. But that's what I'm doing on my side. I do that. That's my hobby. So anyway, so that's all being built for you. Most of it's done. Okay? Okay? All right. Enough about that. It's going to be a great 2021. Stiglitz, I have a lot of his stuff. He gets published now because, he won the Nobel Prize. It's a little bit socialist for me, but I guess maybe you're European and you're like, that's not socialism. All right. Yeah, I get tired of the preaching parts. I mean, not that he does, but I get it. It's sort of the millennial thing, right? I don't know. So yeah, I mean, Stiglitz, sure. But I want to do more. I want to do more investing and trading than that kind of economics. Social welfare and social justice economics. I don't think that'd be the point, right? I want to read the top 100 trading and investing books of all time. So I don't want to make it, social economics and such, or political economics. So no, but I do want to read books, let's say on macroeconomics. I think it would be helpful for a lot of people in a lot of industries, whether it's currencies, commodities. I don't know about real estate, but trading stock indices. People should know things like why. Imagine like no one. Let's say someone not familiar with what we do here every day. Someone brand new, never met us before. Okay. And they don't know anything about the New Zealand dollar. And they're like, I can trade the New Zealand dollar. Why would I want to trade the New Zealand dollar? Or the Australian currency, or the Australian stock market. You're like, why should I trade the ASX? Well, now we can talk about macroeconomics and global trade. Now we can talk about the value of the Aussie dollar. We can talk about supply and demand. We can talk about iron ore and coal. And maybe because of the macro relationship, things like gold and oil. And there's a lot of things that some people just don't know yet. They just don't know. They're stock traders and they're stuck on Tesla. They want to talk about Tesla all day and Apple. I'm like, all right, that's all they want to talk about. So it'd be great to open people's mind and say, well, most Teslas are made in China. All iPhones are made in China. You should probably know more about global trade and how to affect things, whatever. So, but social economics, no, probably not. But I have no problem with Stiglitz. Yeah. Yeah, I want to keep it investing and trading. Okay. I want that to be the message. Okay. Have you read Piketty, though? Piketty's younger, so he wasn't old enough to win the Nobel Prize, so they gave it to Stiglitz. But Piketty, and he's French, he had some pretty interesting ideas along that vein, but he used big data to get it. Big data back like 8 years ago, which was pretty amazing. So he, instead of sort of theory and doing, surveys and stuff, he gathered statistics from all kinds of databases all around the world and tried to crunch them together. And I think he was the first person to kind of do that well, because it was just ahead of the curve to how he got the data sets. And from that, he makes very similar, I think, claims as Stiglitz. But like I said, he was too young to win the Nobel Prize, right? So you might want to read him if you like Stiglitz, okay? Piketty. I don't remember his name, first name. Piketty? Thomas? Is it Thomas Piketty? Capital and ideology. See, just right off the way, what do you mean ideology of capital? Oh my God. But anyways, Thomas Piketty, born in 1971. See, he's essentially my age. Too early, right? You have to be older. You have to have more gray hair. Professor of Economics at School of Advanced Studies of Social Sciences, Associate Chair, blah, 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 blah. Piketty's work focuses on public economics. See? Same thing as Stiglitz. In particular, income and wealth inequality. This is where I roll my eyes. I mean, oh my God. I'm a middle-aged white male who's reasonably wealthy, so I roll my eyes at it, of course. But I've read all the books and stuff and had the conversation, but it's just not my thing. I have nothing against it. When you read 5,000 pages of work on income inequality, I just get wore out. That's all. I have nothing against it. Don't get all mad at me. I'm not a racist. I preach to teach. But anyways, but like I said, if you've read Stiglitz, you got to read Piketty. Okay, that's you have to. And there's one other guy. I think he died though. Stiglitz. Well, there's one other guy you should read on that topic. Yeah, you haven't heard of him. Look him up. See, that's sort of like, that's how Harvard did it, right? Where you have to read everything about everybody on the subject matter instead of just reading one person's book. So, like I said, you'll know Stiglitz because he won the Nobel Prize, but you got to read Piketty too. And you're like, oh, so if you like Stiglitz, you're going to like Piketty. It's good information, good data. So he was kind of, like I said, he was the first that said there is income inequality in the world. There is. And I have data to prove it. Not just assumptions, not sort of rules of thumb. We all know it, but here is the data, right? Boom. Okay? So income inequality and stuff. All right. So, I mean, I can go into this, and there's other things you could read. I don't want to get into it. Okay, this is all side matter, but I've done all the work. You're luring me into that. There's other things you should read, and it's not as easy as, white men are all evil and hoarding all the money and treating people unfairly so that they can have it all themselves. There's a lot of issues going on, not just the being born with a privilege. That is part of it, of course. But there's a lot of other things that are going on amongst human beings making these decisions. Right? I don't think in America, now of course there's always, there are always cases that will, but in general, I don't think the CEO of Apple sits down with their recruiters and say, okay, everybody pay women 20% less. Any female engineer that is going to work at Apple is going to make 20% less money, and that's it. And in fact, it's in the employee handbook. And if you pay women too much, you're fired. Like, this doesn't go down, and Apple's considered a good company, but it might be likely that women make 10 to 20% less money. So, but it's not Apple doing it, but it's happening at Apple or at any other company. So there's more to it than that. There's more to it. It's more complicated, but it's interesting to focus on. Yeah, but so now Michael wants the CEO of the company to make the same as a janitor. That's ridiculous, right? Unless the janitor has a PhD and, right, and leads a company of thousands of people. Like that, the janitor shouldn't make the same as a CEO. But now, here we go. See, this is why I avoid it. Here we go. We have to, I was going to say meet in a bar and have a couple of drinks, but then we might kill each other, Michael. Michael? Oh, I know. So I'm like, Michael, put the knife away. Come on. Anyways, cool. Anyways, it's fun. It's good discussion. It's complicated. Yeah. Okay. And it's hard to have these conversations in chat. Okay, let's move on. Oh, I say it's not possible for a CEO. Okay, okay, good. Just so you know, the way I look at everything politically, and I've had to write papers and papers and papers and papers and all kinds of stuff. I'm an entrepreneur, and I believe the secret to the success of humanity lies in your ability, right? Your ability to create value for others. And there's a million different ways you can do it. Okay? And the government should support your ability and even stimulate your ability to create value for others. That's what entrepreneurialism is. It's the kid that decides instead of playing video games this summer, he's going to take his Christmas money, buy a lawnmower, and all summer hustle mowing people's lawns. And at the end of the year, there's $10,000 in his pocket so he can go to college. Or buy a car. Or buy drugs. No, that would be terrible. Right? Like, hey, son, you want a car when you turn 16? Here's our old lawnmower. Make sure you maintain it because you got to hustle if you're going to buy that car. And now the kid has to go door to door. Hey, ma'am, can I mow your lawn for $10? Save the money. Make $10,000, $10 at a time. Get out there and hustle. So whatever it is, that's what I believe in. That the government creates or supports, more importantly, supports people's ability to create value any way they want. So when Uber came out, they're like, you can't drive Uber. What about the taxi cabs? What about the taxi cabs? They suck. That's why no one wants to go in a taxi cab. Oh, well, you can't use Uber at the airport. It's illegal. There was a time you couldn't take an Uber at the airport because it was illegal. See, I hate that stuff. Okay? Protect the taxi cab. Nobody wanted a taxi cab. Okay? So anyways. So I believe in things like Uber. I believe in things like Uber for mowing lawns, Uber for plumbers, Uber for house painters, Uber for everything. I want my house painted today. Now, in fact. Who's available? Okay? Anyways. Okay. Okay. Let's just clear this out. Let's get on with it. Man, you guys are crazy sometimes. Yeah. Yeah, Jimbo. Well, if you remember Daniel, my friend Daniel, member of FX Bootcamp for many, 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 many years. I like him because he's smart, he's tough, he's hardworking. And he tells stories of when he moved to Canada, fresh immigrant from Asia, gets an engineering degree, and the only job he can get because he's Asian is pretty menial. But he takes a job anyways, no complaint. And very, 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 very quickly, he was out hustling all the other engineers to a point where the other engineers are like, this sucks, Daniel. You're taking all our work. And he was getting paid for the work, right? So he'd work days, nights, weekends. They'd get a call and they need an engineer 300 miles away, and all the local the local white Canadian engineers, they're like, no, I don't want to drive way out there. It's like 300 miles, eh? Daniel's like, not a problem. Boom, get in the car, off he goes. And he just hustle and hustle and hustle. And all of a sudden he's driving around in a brand new BMW, right? Because he out hustled everybody. And that's the kind of guy he is. And, and he's got amazing stories how from that young man that finally made it to Canada to what he did the rest of his life, non-stop hustler. Awesome. I love people like that. I love Daniel. He's like family. But that's our connection, where it's the hustle first and foremost. Yeah, you got to have a brain. Yeah, he had an engineering degree, but he couldn't get like a serious engineering job because in Canada in 1980, they didn't hire Asian people to do that. Why? Racist. Straight up. But it didn't hold him down. He just had to work harder than anybody else, and then he ended up making all the money. That's how it goes. Yeah. So anyways, right? That's how you earn my respect. All right. So what do we want? So let's go back. We said this was the last day, and this week would be like this. Oh, snap. Okay. Now, lots of volatility. Lots of volatility. Holy schnickerschnocker. Why? Well, some people are out, some people are in. You understand that? You have to know where you want to buy and sell. So when it drops so fast, very often I get questions, and I got questions about this 2 years ago. I still have the video up, I think. Don't I? It's lost in Thomas Piketty, I think. No. Anyways, very often I'm asked, why do we get like this V-shaped recovery kind of thing? Why did it respond so fast? People already had orders in. I want you to think about that. I want you to think about that. This means people already had orders in the market. So you're like, oh my God, it happened so fast, I couldn't react to it properly. Well, that's the problem. You're trying to react to it. Okay? Okay? So it seems like people had buy orders on the support pivot. This is S1. Okay? On says selling now. Well, you have to remember, we said this is the end. And we said it would be at this price on this week. Okay? So I think everything is set up on this. That's why we talked about it for forever, for weeks and months. Okay? So now what? Do you think this is random? Do you think this is random? Okay? What do you do here? This. This is straight out of the price action course, this is basic trading. Okay? Okay, buyers are buying low, sellers are selling high. This sets it up, double top off the top. Okay, well, one of these is a trade. Then you might consider this a lower low after a double top. So your trade plan should be on the roll reversal. And if you're a bear, you're down here. So really, if you are a bear, you should probably have a trade. Well, this was plausible. One of these is plausible. This is plausible. Okay. So this is the Monday open, the Sunday open. These are, I guess you could just call it top. Okay. Remember our target? Do you remember our target 3 weeks ago? 122.50. Do you remember that? The reason I say do you remember is not that I'm right, because of course I'm right. It's that if you believed it, it sets up the basis of the flow the other way. If that's what you believe, remember, it's your belief system that matters. There is no right or wrong. But if you thought this was the top, in particular, this price, and on top of that, at this time, it would set up your basis for your trading. You can't, the reaction model works much of the time, but not all of the time. You have to have your belief system in place first so that you can interpret the data through a bias, through a lens. Then it'll make a lot more sense. Okay? Now, some people here, they throw out the December pivots and they're looking at January. Huh? This means December's done. So what else are they doing? Yeah? I can't even do it with that because it overlaps too much. Let's do it this way. Okay, so now let's go back to, Wayne, how do I react to this drop? Well, you don't react. Someone had a plan. And their plan is they wanted to buy it around 121.50 for multiple reasons. Now, does it mean they're going to make money? Well, they thought so. That was their trade plan. Okay, cool. And it still might do it. And that's what happens to you when you're in a thin market. It doesn't really do anything. But I would say, based on our conversations, you probably have a belief system that looks like this. Okay. I'm not saying that's going to happen, but I know that's what these guys are thinking here. And which means they're going to sell it here. If this part happens, then that will happen. You got that? So now we're talking not even today. And then, of course, do you think Christmas is going to be a problem? Banks are going to be closed and all that. Trading volumes. How are you going to behave on Boxing Day? Maybe you shouldn't be at your charts at all. Okay. Cool. All right. What currency or commodity would you like me to cover next? Let's see what's on your mind. Talk to me, Goose. How can I help? Bitcoin, uranium, WTI, gold. No XRP, huh? Okay. Let's do this. I'm going to do XRP. Wah, wah, wah. XRP is dead. All right. Oops, didn't want to do that. So what do you want to do with this? This is the end. Are you going to buy it? I'll never trade XRP again. Huh? Just interesting, right? Dropped 25% so far this week. Dumbass, what? Yeah, 25%. But make a decision. Is it a value trap or a value opportunity? Yeah, but we don't need like that. This idea Michael now says, you know, it's reaching an all-time low at this pace. Don't even think about that way. Okay? There's a bit of hyperbole in there. We need to say, based on your analysis, you either want to buy it or you want to sell it. It's probably not a good place to sell it now because obviously it's at support. And if it's obviously at support, is that an opportunity for you to invest? And of course, you should know why it dropped because of the lawsuit and all that kind of stuff. But it's like do or do not. I don't care about the hyperbole says. And I know I'm being tough on you here, but a lot of people, especially with cryptocurrencies and stuff, I hear like, you know, Bitcoin's going to 200,000. I'm like, why? I don't know, right? Like, it's just too much. How do we make money today, tomorrow, next week? So, right? So the question here is it truly over? If so, you walk away or sell it. And you're like, I'm going to sell it off of this 21 EMA on the 30-minute, or you're going to sell it on next week's pivot or whatever. Because you can see this is a sell zone right here, right? I mean, you should be able, with your mind's eye, do the calculations. So you're either selling it here, which I think is a little dangerous, is probably not the right price, but you're either going to buy it at 30 or you ain't going to buy it at 30, right? That's it. Okay. So let's do our XAU. Okay. What do we know here? Well, on the weekly basis, giant mediocrity, suggesting inside week. So let's look at next month maybe. Just see where we are. Okay. Much more clearly expressed on a monthly. Weekly says we're just lost at sea without a rudder. But you should be able to see if you're a gold bull, that's pretty obvious. And if you're a bear, there's nothing here yet. And that's that. Now, if you're a bear and you sold it on the R1, it's not really how I trade pivot points. But if you're going to do it that way, your best expected outcome is 17. So you're selling at 19, hoping it goes down to 17. But the issue is there's a lot of hope on that. Not that this has to go up. It's just you're hoping for a lot on a time when no one else is really trading. Now, you might say, well, Wayne, I'm connecting these dots. Let's do it this way. Wayne, I'm connecting these dots. Okay. I still don't see it. Okay. You know, I don't know. I don't know what you're hoping for. Okay. All I know is there were definitely bulls here that know what they're doing. Bears tried here and got mediocre results. And they had I think they had the advantage. Okay. That's what I'm reading into this. Okay. And they had the advantage and they still didn't win. So right now, it seems if you're using price action, right? Remember, price action is a trading strategy. Pretty obviously, this is a buy zone. If you're a bull, it's a buy zone this month and next month. Okay. Okay. Someone says, oh, Alex says, hey, what if I sold the weekly M3? Yeah, but you're in la-la land on the monthly. So it just seems incredibly mediocre. Okay. And you're also right now, apparently, in the business of selling higher lows and higher highs. So right now, it just seems like that. Okay. So it's not that it can't. It's just like I start on the higher time frame first. And this is what we got. Okay. And if I'm a bear, I want to see like this. You understand? There's a difference, isn't there? Remember, I do strategy first, which is higher time frames. So my macroeconomic view might give me a bias for all of 2021. Then I'll drop down to only monthly pivot points and say, okay, based on my bias, are we going in the right direction? And if so, where are we in the cycle? Because I know if I'm a bear on this, there will be times in 2021 where gold is up. And if I'm a bull, there will be times in 2021 where gold is down. So where are we? What are we doing in general now? And so in this process, asking that question, I say, oh my God. Okay? That's what the technical analysis tells me. So whether I'm a bull or a bear now changes how I interpret this. If I'm a bull, oh my God, I'm going to start buying at 1850. If I'm a bear, I'm going to hold up. I'm not even looking at the weekly yet. I'm not looking at the daily yet. I'm just saying, not here. Not me, Bubba. Okay? Yeah, this is R. But if that holds, that's an inside month, and I'm not really interested in that. And if that ends up being a top, then there's still this to come, which would then set up the basis for bearishness later. It's just not now. Got it? Huh? Right? Am I right? Oh! Ooh. Sorry, I got butter in my throat. Your target is 1874. Why? Why would your target be 1874? Let's try to figure that out. Why so small? Let's see. 1874. Why would you... Why gee whiz. Let's do... So you're a bull. Let's do day trading. And take a look. And go smaller time frame. 18. I can't figure out why you'd only want 1874. Why so little? Swing trading what? But I didn't see it on the daily. the weekly or the monthly, so I must be missing something. Why would you only, like even day trading, this would go to 1884. So, and I'm not picking on you too, Tyler. I'm trying to figure it out. I'm trying to give you advice. No. Let's go through the process, right? This is me not heckling you. Let's go through it and see what we can learn together. That's not swing trading. Yeah, you're not, no, yeah, that's not swing trading, my friend. Okay. It looks like you might be like scalping on a tiny time frame. I don't understand why you'd only make that little bit of money. I don't even understand why that'd be interesting. If you get this right, so where are you? Where's your entry? Okay, we know this is the right role reversal on the higher time frame for a bull to rebuy. So, okay, so like even the conservative target is 1884. Yeah. Isn't gold expensive for scalping? $68. Yeah, okay, so I see that. Let me zoom back in. 68. Oh my God, you're so way late, dude. What do you mean 68? Where are you? 68, 62, 60. Oh my God, 1860. You're kidding me. You're like, oh my God, that's a horrible trade. Oh, we gotta fix this, dude. What are you doing, Tyler? Oh my God, that's terrible. I was thinking you were in at 58 or something. Oh, that's a terrible entry, dude. Sorry, I know I'm not supposed to be picking on you. That's terrible. I don't understand it at all. You're right on a 786. Hang on. I'm trying to figure it out. Hang on. But that's my first reaction. Like, oh my God. Oh God. Isn't that a Kanye thing? Oh God. What song is that? Clicks? Is that Clicks? All right. So let me try to figure this out. Because I like scalping too. No, impulse is great, but a bad trade is a bad. How do you have an impulse on a bad trade, right? Like, oh my God, oh God. Is that Clicks? Does anyone know? And don't say I said Conway West. No, Kanye. I get it. No. Oh God. It's Clicks. All right. Okay, based on daily pivots, your 1868 is an unbelievably awesome sell zone. So you bought it like right where a bear would sell it. So I don't understand that using daily pivots. I just don't understand it. Using price action, you're selling it right on the resistance line, like almost to the penny. You're selling it there. Oh my God. Oh God. So I would have thought if you were taking the shot, Tyler, that there would be a double bottom play, right? And you're like, okay, I'm going to take it off the double bottom and force this up. So you'd be in at 58. So when you said 68, I'm like, oh God, oh, that's terrible. All right, so anyway, so you're way, way up here, and you should be down here for a long. Okay, fine. I'm not upset that you're long. It is click, right? Yeah. Okay, I'm not upset that you're long, but that's a very bad price. But if you're long off the 50% daily M2, I get it. So if you're down here, I get it. Up there, that's bad. We have to fix you. Like don't take it personally. It's just a bad trade. Now you're saying you want to get out at 74. So you're making such little money. So you're exiting here somewhere. Let me figure this out now. I don't see it, bro. I don't get it. I don't get it. So if I bought it down here, my minimal acceptable performance really is this target here, 1884. So I'm $10 above you. But it's such a good trade, Tyler, and this is what I'm trying to tell you. You're way late, like way late. You're hours late on this. But let's change the point of view here, and let's do swing trading bullish. Okay, so now you're in here, which is great. So you're long. You should be long down in here. Okay, great. So where are we going with this thing? Hang on, let me change the settings here. And oh God. So you should be on your way to 1927. All right, so if you're going to enter down in here, I would say I wouldn't do it for the day trade because it's so much risk. The risk you put on this trade dictates you need to get paid a reward. You understand that? Risk is a function of reward, but if all you do is high risk and small reward, what you're doing is just not going to work out. Okay? So let's explore. Your setup is fine. Your timing is poor, but let's go with this idea that you do gold on a smaller time frame. That we know the daily was, where was it? The daily target is here, right? And then we know there's visual resistance here. And then the target is here. Now you might say, well, with Christmas, I don't want to do weekly and stuff. I get that. Let's pretend it's not Christmas. Okay? Can we do that, Tyler? Let's say there's no Christmas coming up. This is just a regular old day. I would anticipate this, and then this. So I think if I were me and I did this down here, so I'm long at 60, not 68, I would go for 19. I'd go for 19 on the short run. It's not a day trade. It's not a swing trade. It's mediocre. That's a mediocre setup for what you got. But you got $40, I'd say. If you're ultra conservative, you just got to be in it a day or two. But this is worth 40 and you're trying to pick up 6. My humble opinion, this is worth, just on your little scalp, okay, you should be targeting 1888. And you're at 68, you should be in at 58. Okay, so to me, this trade you took is worth $30. I'll say it on a daily trade. Okay, let me back out so it's clear. You're supposed to be down here somewhere. We'll call that 60. And you should be going for 90. Okay, today. So I think the value of your trade is 30. Your entry's late, so that cost you 10 right there. So now it's worth 20. And you're trying to pick up 6, so you're throwing away 14. Okay? So your risk-reward ratio is you're throwing away, you're going for $6 and you're throwing away 14 of the value, including your late entry. So you can see, like, I think your strategy is fine, but your technique was poor. I think this is worth $30 and you're going to walk away maybe with 6. Now, if you just tweak slightly what you did, Tyler, I think you can double or triple your money just by having a better methodology. Michael says it's a counter trend trade, sorta. Depends on how you look at it, and we can always get caught up in that game, but that looks like an up to me. So if Tyler's like, I'm going to buy these dips, okay, this is just a dip, but we're supposed to be going here. Like if Tyler just put in a little more planning, he bought here, I have no problem. Yes, it's late and sloppy and lazy and amateur, but we'll fix that, right, Tyler? If you're going to trade it here, dude, it should be going here. Like, that's what it's worth. Yeah. Thank you, Tyler. I mean, and this is how you learn, right? Being vulnerable. Like, if you're going to do that trade, you got to get paid, son. This could go to 1950. And you took the trade. Now you just manage the stop. Like, it's no extra work to let it run. Right? What if you fib the Monday move? Yeah, but that's what that is. It's a 50%, right? We already know that, right? Easy. Maybe it's a 618 to you, but we're kicking off the 50. Oh, I don't have it set properly. Hang on. This is a little higher, and this is a little lower. Yeah, I'd call that a 50. Oh, wait. You're saying fib it down? Ha 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 ha. No. It's been trending up for a month, dude. If you were going to fib it down, it'd have to be this way. And you can see it's not ready yet. Okay? No. This is up right now, bro. Okay? And I won't even look at it till I get my confirmation. From a bearish point of view, I won't look at it as a bear until it does like this. Okay? And then I'm like, okay, now we got a top. Remember, guys, we do not want to outsmart the market. I want you to think about that. Sometimes I throw these things out there to show you it can be done, but it's not the basis of how you should trade. Okay, got that. If you are a bear, you have to confirm bearishness. So you can say, well, I think this is the top for the year. Cool, right on. That's what a bear would think. Gotcha. So what does a bear do in a situation that you have higher high, higher low, higher high, higher low, higher high, higher low? What does a bear want to see? Lower low, lower high. Have we had it yet? No. So if bulls are buying here, and they might, Tyler bought. If bulls continue to buy, which the trend suggests is a high probability, then these guys are thinking this. Now, we might not get there because of Christmas and all that kind of stuff. Great. Has nothing to do with a bear. If you're a bear here, does it mean you're wrong? No. It just means it's the wrong time and price. So what would a bear want to see that would make a bear sell? How about something like this? Somewhere in there, a bear makes a decision. Ooh, lower high or double top. Lower low, lower high, lower low. Somewhere on there, you will get a bear. A bear would sell here, a bear would sell here, and a bear would sell another one in the future. Does a bear sell a higher high, higher low? No. No. Too early. You're gambling. You're betting. And you're like, but the trend line. Oh, people and their stupid trend lines. But the trend line. Well, there's a million trend lines. You see a million. Someone else sees a different million. You got to be careful. I'm not interested in trend lines. I'm interested in trends. How do you define a trend? Series of higher highs and higher lows, or a series of lower highs and lower lows? Right now, this is trending up. And if you're a bear, it's just like, wait, not yet. Not yet. Not yet. Yes, it does, Peter. Yes, it does. I've drawn Fibonacci this way for almost 20 years because I'm self-taught. When I started using Fibonacci, there was no books that I knew of. I couldn't find any books, any videos. There was no training courses on Forex, or technical analysis was laughed at by most people. So I tried to figure it out, and I didn't like the way that Fibonacci worked. I didn't like the way the study worked. So I went in and I manually changed it to work for me. And I draw my fibs upside down, not because I'm retarded, but maybe because I'm a genius. I don't know. But I draw them upside down on purpose, and then I rename these manually, because what I'm looking for is I want to know how far it retraced so that it projects up, all in one study. I don't want to measure one way and get the retracement and then measure the other way and get the extension. Now, maybe this makes no sense. Maybe I didn't use the indicator right from day one. Well, I'm sorry, right? I had to figure it out myself. This tells me, okay, and this is right out of the course, right out of my book, right out of everything I've ever done for the last 20 years. If this is my buy zone, my sweet spot, okay? And my goal here is buy the dip and hit the rally. Now, I can reverse engineer this. If my target is 618, then there's a high probability that it's actually a low kick. If it kicks here, it actually tells me we're going to go to the 1618. Okay. So this 382 will predict the 1618. That's why I said we're on our way to 2000. Okay? It's actually 1987. Okay? Oh, Ryan uses Fibonacci? Really? Okay. See, there's just different time frames. Here's one move. Here's the next move. Or if you're doing the frequency, right, you just keep buying the Fibonacci retracements. So if you're just measuring this one, okay, 618 predicts 1382, so that's the easier target, 1937. Oh, the 4-hour looks like an inverse head and shoulders. Let's address this. No, it doesn't. Oh, what? No. An inverse head and shoulders on a 4-hour? I don't know where you're looking. This? No. Yeah, no, I wouldn't do it that way. Yeah. I think you guys are overcomplicating things. I see a W and it's overcomplicating things. Is gold going to go up for the next 6 weeks? Yes or no? That's the first thing you need to decide. Second thing is, what do you do in a situation where you think gold is going to go up for the next 6 weeks? You buy dips. Should you buy a 3A2, 618, 50%, roll reversal? Yeah, it doesn't even matter. Right? I want you to focus on dumbing things down more than looking for inverse head and shoulders and so. Why does it matter? It's unnecessary. Let me say it this way. If your plan, so this is Wednesday, if your plan was to buy this week, then you should have bought it. Here's the obvious roll reversal. Okay. Like, I mean, that's it. There's nothing else. It's just, right? That's all there was. You had your price a long time ago. If you're right, it's going to go up. If you're wrong, it's going to go down and you'll be knocked out. But like, I think you guys are adding too many layers. Oops, I didn't have this right, let's say. This would be more monthly. Yeah, this is like a monthly move. I don't know. So let me share a basis of trading. Okay? First of all, let's make this blank. Okay? I'm going to show you how to trade properly. Are you a bull or a bear on gold? There's nothing on this chart. It's gold. Are you a bull or a bear? If you can't answer that clearly and distinctly, you shouldn't trade it. It's the first thing and it's the most important thing. So now we don't have to do Gartley patterns or, the frequency. If you look at the maroon stochastics or there's all these weird indicators. Dude, are you a bull or a bear? I don't get why there's 10,000 different indicators. None of this stuff is going to save you. All this crap, Bill Williams, great. Well, this alligator. Oh, now it's clear. But dude, like, none of this is relevant. You could use it, of course, if you know what the math is. But if you can't tell me if you're a bull or a bear on gold, then it's just not going to work out. Okay? Hey, Stevie. Moon phases. Moon phases are fine. I've heard of people using moon phases. In fact, if you want to have someone trade your money based on the celestial analysis of stars and suns and moons and all this, I know exactly where his office is. Right? It's where Forex TV studios used to be. I used to go on a regular basis, flying by helicopter to the Wall Street heliport, and I'd run down the street, down Water Street, and then you take a couple of turns and you go up, and as soon as you come out of the elevator, the Forex television studios were to the right. Right in front of the elevator is a door, and he's a professional trader, and he's got all this celestial stuff, and I imagine he's got incense and candles on the inside of his office. But people apparently do this. There's lots of ways to trade. The thing is, whether it's right analysis or wrong analysis, whether you're looking at tea leaves, it doesn't matter. Because if you've made a decision, then that's what's going to happen. So I look at the fat. There's like little clumps of fat in my coffee. They look like my coffee looks like, soup from Thailand. There's like little fatty, oily stuff in my coffee because I have ghee in it. Okay, great. And the way that the ghee floats in my coffee tells me I'm a bull. Done. Is it right? Who cares? Because I don't know if I'm right. You don't know if you're right. But we know how to do technical analysis. And the technical analysis says not whether I should be a bull or a bear. It's just, is it a good price and time? That's all it tells us. Price and time. It's the only thing on our charts. So now I say, okay, I'm a bull, and let's pretend it's Sunday afternoon when the market opens. Okay, or Monday morning, whatever it is for you. Monday morning, I'm a bull. Great. So I go to template, swing trading, bullish bias. And let's zoom in and okay, here's my plan. I'm going to buy it around 1885 and I'm done. 1865, Done. My whole week is done. Oh, but the head and shoulders. What do you mean the inverse head and shoulders? The rest is just, if you're trading the price action and managing your stop and all that kind of stuff, and maybe you want to do some things on the other time frames, that's great. But understanding how to trade this week is straightforward. You're a bull. This is a buy zone. Enough said. What else is going on in the world? Oh, it's the stimulus. Oh, it's not the stimulus. Oh, it's the Brexit. Oh, it's not this Brexit. It's COVID 2.0. It's not COVID 2.0. It's just, oh my God. Oh my God. Oh my God. Oh my God. Here's how we traded last week. You ready? This is your buy zone. This is your target. Bravo! Bravissimo! I'm the smartest guy in the whole world! No, you didn't. You bought it in the buy zone. Gee whiz. All right? But if you didn't know you were a bull, then you're going to be way late. Always. Like a dog chasing its tail. The view never changes and it always stinks. Holy smokes. What am I going to do this week? What am I going to do today? What am I going to do tomorrow? If you're asking those questions, that's why you're probably as not successful as you would like to be. Okay? So, now I want to buy. I want to be a buyer. I'm a buyer. Do I have the right price? Oh, yeah. I have a zone in which I can buy anything I want. So, right, it's only a $15 zone on a $2,000 asset. It's not that big of a zone. It's pretty specific. So you're like, okay, now I'm in my somewhere between 1850 and 1865. I'm a buyer. Okay, now let's drop into day trading. You ready? 3, 2, 1. I guess I have to do it right. Hang on. Boom. Okay, let's go on to a 15-minute chart. Okay, according to day trading, is this a good price to buy? No. So now you got to say, well, 1865. Let's do it again. 1850. 1850. 1865. We already declared this on the higher time frame. Okay? So now what? Is this a good place to buy? No. But this is. This is. Okay? Now throwing in day trading, you can do it here if you're right now. You got Tyler's double bottom. But do you understand why now I freak out where Tyler's way the heck up here and he wants to buy it? Like, well, what the heck? That's right? Anyways, but you could. But my biggest problem with Tyler's plan is that he only wants this. What do you mean you're doing all that work for that? I think you get this. If you get this right, it's like $80, not $8. Tyler could increase his value of his trade by 10x. It's not actually 10x because that would be a magnitude, but 10 times. Okay? Morena says higher highs and higher lows, which is the next step, right? The next step is this. Okay? And because of that, Morena, what Morena is teaching us is Elliott wave. Okay? Which wave is worth the most? Which wave with Elliott wave theory is worth the most? The expansion wave. Tyler, I'm not giving you advice, son. I'm telling you how to plan your trade properly. Yeah, Morena doesn't use Elliott wave. Neither do I. But I'm just trying to break down like everything. I'm trying to break everything down from this general wisdom to like why it works. Right? That's why I teach you the math behind regression studies, the math behind MACD, the math behind stochastics. I want you to understand all of these things, right? So now we're using Morena as an example. She's like, hey, I like this, but I need the higher high, higher low. This makes sense. Think of it psychologically. Someone is going to be more aggressive than Morena and take the double bottom at 1860. Because it's a day trading zone inside of a weekly trading zone. And some people are inherently going to be more risk averse and some will be less risk averse. So the first trade is higher risk. They're trading a double bottom on a daily inside of a weekly zone. They're in the first mover. But remember, first movers don't have an advantage. Except if they get it right, they get a little more money. But they're also assuming more risk. So inevitably, risk-adjusted performance will tell you there's no real upside for going first. And as a venture capitalist, I prefer second movers than first movers, because in the first mover, if I have to invest into new technology in a startup, I have to hire all the right people, train all the right people, make sure they understand that. Then we have to build all the technology, make all the mistakes. And now once we got this new amazing thing that's going to change the world, it's so radical and so new, nobody knows they need it. So now you have to actually educate your industry and your customer base to say, hey, IBM, you need to buy this from us. And they're like, why do we need that? So now you have to educate your customers. And meanwhile, you're burning cash like crazy. And now once the customers figure out they need it, guess what? Someone else has figured out your genius and they can replicate it for half as much money, and they can make all the improvements that you can't make because it's been coded and you kind of painted yourself in a corner. And someone else says, that's a brilliant idea, but if you tweak it, I can build something exactly what IBM needs. And the first mover had to educate IBM what they needed. And then the second mover went in and gave it to them better and cheaper than you ever could. That's how I think as a VC. I don't want to be first mover. I want to be second mover. And then once I'm successful, and I get IBM and all the clients, I go back and I buy the first mover for pennies on the dollar. Okay? So now going back to this, wave one is this produces the higher high. Higher risk, but you had to have better analysis so that you could predict it was going to happen before it happened. That's why it's higher risk. So now we're getting our higher high. So now Morena needs a higher low, which is the 2. And now Morena comes in and is like, okay, I get this. I get all of this, right? Cool. So now Morena needs a role reversal. And then everybody's on board. Risk, right? Risk takers, those are what? A little less risk. And what happens? 3 wave is bigger than 1 wave. And then what? Then we're going to hit our first level of resistance, some profit taking, the latecomers, and then a correction. Oops. 4 is this one. And then this is 5, and then this is ABC. And then you get the new role reversal, and then you got to be 1 again. High risk, medium risk, way late in the game. And that's why I was kind of bugging Tyler, like, I get the move, it makes sense, but on the time frame Tyler was taking the trade, he's buying it way late. Okay, you might make money, but it's the right thing at the wrong time. Anyways, so that's how it all works. Oops. Okay. 1, 2, 3, 4, 5, and now you get your A, B, C, and then you get your new 1. Now you're a genius, you know, Elliott wave, right? Now you can do the Elliott wave dance. Isn't that cool? Morena is actually a genius when it comes to Elliott wave. Cool, right? All right, guys, are you going to join FX Bootcamp so you can take your trading to another level? What's the holdup? Oh, by the way, I sent out the email to those in the swing trading group, or to those that used to be in the swing trading group, about the annual membership. Are you guys going to join me for 2021? I'm pulling the offer I'm pulling the offer in the first week of January. I'm not going to commit another year to someone that comes in March. Like, Wayne, will you commit your entire life? Another year from March? No. I'm going to commit 1 year, and that's that. So are you committing? I'm committing for a year. You're going to save money, and you're going to get the macroeconomics training course for free, because I'm going to record it live in January in front of a live studio audience. We're going to do macroeconomics. Well, Felipe, here's the thing. If you haven't joined FX Bootcamp first, you're not invited to the swing trading group. This isn't me holding your hand and saying, hello, this is your 5A cross. I'm not saying that that's you, but it's only for people that have gone through the training courses and want to work with a group and a leader for an entire year to sharpen their saw. So you got to join FX Bootcamp first. Okay? So if you haven't joined FX Bootcamp, then you didn't get the email. So the first thing, like most people joined a year ago, 2 years ago, right? So now I'm sending them an email to say, hey, there's another year here. Yeah. So I'm going to rename the first fundamentals course, I'm going to rename it monetary policy. So here's the thought process. Now that you know what money is, you know the asymmetric information problem, and why financial intermediaries like banks get involved, and then you know what banks do, and you know how banks make money and then manage their balance sheet, then you can understand the fractional reserve banking system in which central banks create money, not through printing, but through creation. Then you understand how central banking works, how the FOMC works, right? And we can answer questions like, Wayne, how does the discount window affect the ER in the 1 over R plus E equation? Oh, that's a great question. But if you can't answer that, then it's going to be a real problem teaching you central banking. And then, so then you understand how an adjustment at Fed policy creates money, changes money supply, and moves the value of a currency and interest rates involved. Wow. So now the next thing is, why the heck would a central bank want to do that? What are they looking at? What's the reason behind the strategy? And that's where macroeconomics comes in. So we're going to look on the other side of the thought process, not how they do it, but why they would want to do it in the first place. So I'm going to rename the fundamentals course the monetary policy course, and this one's going to be the macroeconomics course. So, okay. Oh, and you didn't get it? So if you are in the swing trading group, if you ever were in the swing trading group, okay, or if you ever signed up for FX Bootcamp training videos, but never joined the swing trading group, and you would want to, please email me, wayne@fxbootcamp.com. It's only out there, the offer is only out there like 10 days or so. Okay? So essentially you get 3 months for free, and you get the new macroeconomics course that you can attend live while I teach you. It's not bad. But if you'd rather just be a monthly member, that's cool. That's cool. Monthly members are fine. Cool. Well, thank you for being here, guys. Tomorrow's Christmas Eve. Are we doing a webinar tomorrow? Alexander says, will it be available next year? It's over January 4th. I'm pulling the offer. That's that. Okay? Day off. What do you mean? Day off. I'll probably do it. I'll probably do it. Yeah, so how about that? Oh, no. I have no plans for that, Alexander. I have no plans for this. Right on, Felipe. Felipe Rojas. Felipe the Red. What would we, the issue is planning next week? Yeah. So yeah, I will do tomorrow. Dr. Reds, yeah. Yeah, okay, I'll do a webinar tomorrow. Don't make me sit here by myself though. Yeah, a lot of people are busy tomorrow with family and all that kind of stuff. I already had the family over, multi-generations over to the house and fed everybody at the table. Nothing like getting, 10 people around a table. It's always nice. So if I could, I just taught you Elliott Wave in 20 minutes. I must have saved you at least $1,000 in training courses. So if you appreciate that, would you at least click the like? Half of you haven't even clicked the thumbs up. Yeah, Oz has family and stuff. Yeah, okay. And then I suppose we'll do a fast swing trading meeting in the afternoon. Yeah, Gann, I don't know about Gann, but you might want to, I think he's one of these guys, like I said, who's either retarded or a genius. And I'm not smart enough to know which one. Yeah. So anyways, all right. Peace on earth. May the pips be with you. May our profits be above average. Thank you for contributing 2 hours of your life today. I appreciate you. Mm-hmm. And remember, if you want to take advantage of the special I was just talking about, you have to email me, wayne@fxbootcamp.com. And that's that. I'm committing to another year of my live trading group. Are you willing to make the commitment? See, for many people, they're worried about 4 or 5 months from now, either they're failing and going through a bad streak, or you're super succeeding and you just kind of fade out of the group. I think that's why most people are re-upping, becoming annual members, because they're like, you have to commit. Good, bad, ugly, you're in it for a year. You won't leave. You already did it. You see what I mean? It's a psychological thing more than anything. I don't think anyone's doing it to save $300. All right. Peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow. Thank you for being on my team. I appreciate you. And thank you to Traders Way, best broker in the world. Cheers. TradersWay.com.